So after the fireworks of the whole week, we had a pretty anticlimactic end to it on Friday. I mean, overall, the markets were unchanged, yields were unchanged, dollar was unchanged, commodities, obviously, it depends, but unchanged. Bitcoin got an absolute flushing last night, so that stands out a little bit. But now, look, it closed unchanged, but there were still some significant moves for the different asset classes, but nowhere near as wild as the previous days. Let's get into it straight away. So S&P, closes unchanged, but look, closes near high of day. It did open at the low of day, so a decent rally. But look, I did say we were probably going to rally today. Now we didn't really have a green day, but we did close. It's like the setup for Monday is a bit of a bounce, which kind of is perfect because I was predicting that there would be a bit of a right shoulder. I kind of hope it. I think we should come down, and I'd prefer if we do go down. I think it's healthier actually, even if you're bullish. But obviously for the bears, it's preferable. So if we go straight down, but look at the S&P. Opened pretty close to the low. This horizontal. I do think we'll move a little higher on Monday. Who knows? There could be some geopolitical stuff over the weekend, but I think it'll be short-lived. This rally will be short-lived, and then a violent move back down. So the right shoulder, I think it's going to be smaller than the left shoulder. But still, closing a high of day. So it does suggest it wants to go a bit higher. Look at the Nasdaq, opened underneath this horizontal support, but closed at the horizontal support. So that's supposed to act as resistance. This probably won't be able to rally too much. I don't know whether it's Monday or Tuesday. We'll probably be closing back below this horizontal. But just imagine, imagine you have a small right shoulder and it lasts 1 or 2 or 3 days and you start to come back down again, you're immediately, and obviously when you zoom in, what's the next support? Well, it's the last low, the low from today, actually. As soon as you break that, you're breaking this ascending. And then you're probably going to come all the way back down to 338. This breakout here that we never retested, by the way. So, okay, I'm looking into the future a bit, but that's what I like to do. I think the point is, we might have a small rally Monday, Tuesday next week, but as soon as it turns, and it will, we're not going all the way back up. This has been a wild ride, and this selling here is weaker than the rise up here. I mean, it's gonna flush. I'm sure of it. So watch this right shoulder. S&P, little right shoulder. It might have more support than the Nasdaq on the way down. Dow Jones, look at that, reclaims this horizontal, so back above. But again, it's too little, too late. I think a small little pump and then back down, and the same thing. By the time it starts to retest its today's low, I think it will flush it with a bit of volume, and you're pretty much not on the same day, but immediately touching this ascending and flushing that. And the next support will be here. It's been a while since I've looked at the support below on Dow Jones. So if you see what I mean, same sort of thing, a little bounce and then flush back down. In this case, 33,500-ish. Russell, that actually moved down more than I thought it would. But look at that, closed back in the ascending. Okay, well done, up 0.5%. I think the damage is done. You could even say it hit this horizontal line of support-ish on the way down, but whatever. I think a small bounce, and then 2 or 3 days later, start to flush. And I think once you start to flush, 180, and that's a pretty round number. You're talking, this won't even count at that point. You're going to be coming all the way back down to low 170s. And, you're really close to bear market lows. I remember saying that back here, and then we rallied not too much, let's be honest. So market, it was unchanged, slightly green if I had to give a bias, but I think it's just creating a right shoulder. In some cases, it's not really a shoulder, but a small bounce, oversold bounce. But it's not going to turn into some face-ripping rally. I mean, I really doubt you're going to go all the way back up here. I mean, especially with yields. So small bounce and flush. Banks, same sort of thing. I mean, look at this. Look at the close. It's completely 0%. But still, rallied from the open. The low was the open. Closing high of day, a bit like everything else. Small bounce back down. It's pretty hard to tell, actually. XLF for me is quite hard to read. I mean, you could say here, but we're pretty much there. So as soon as we take out today's low next week, Yeah, probably here just before the gap comes in, and will probably coincide with this. So you probably will be talking about this zone. If I had to guess, 32.5-ish, and then whatever, we'll see. Sometimes it's easier to look at something else like the KVE, KRE will probably put the bottom in for the XLF. Here, small bounce, and then we will finally lose. This is nice, you know, it bounced here on this horizontal, which coincides with the ascending. It's beautiful to see these technicals work just consistently. So yeah, small bounce, and then boom, as soon as you close below this ascending and start to flush this horizontal level of 38 next week, straight back down to 35. That's my opinion. I don't think we're going to stop here for a gap fill. Maybe intraday, little bounce here, gap fill, but whatever. KRE, exact same thing. Bounce and then come back down. 42 is the gap fill. You know what? I'll delete it. Let's be consistent. Straight back down to 40, by which time it'll be a bit like the Russell, all the way down here looking for bear market lows. So the banks and the Russell will start to look alike and look like they're flushing to new lows. So, you know, markets and banks basically unchanged. And I think we're setting up for a little bounce Monday, Tuesday. And I think it'll be a very quick flush to new lows, taking out today's low. All right, let's look at interest rates. 1 year just sideways. I mean, nothing to speak of. It's just another sideways pattern. 2 year, nothing to speak of, just sideways, just consolidating, waiting for the next move. Today was just a breather. You know, I'm not going to, you can zoom in and say the low is 4.9. You know, if we close below 4.9, maybe we start to move back down here, and 5% on the upside. So if you really want to be zoomed in tactical, you could say 5% and 4.9 are the support and resistance. The 5 year just bull flagging, you know, sideways at the top, suggests it's ready for a pump. So 10 years, same thing. Nice little bounce here off 4.2. It's strong, still strong, even though it's a slightly red day, very strong. 30 year, look at that. We're just holding all the way up here. We're going to break out. We're going to go even higher. EU yields, to be honest, the EU, I mean, even if you look at the DAX and everything, they had a bit of a red day. They didn't get to experience the rally of the US markets. Remember, the US markets opened at the low of day and then rallied. So maybe the EU markets go up a little bit. I'm not talking about the yields necessarily, but you know, maybe Germany will, the EU will try to match the late US market moves on Monday morning, which could just pump USA a little bit also. So yeah, sideways action in the yields, waiting for a pump higher, which will probably coincide with a flush. So after a little bounce Monday, Tuesday, you'll probably then start to see yields go back up, hit new highs, the market's flush. Dollar with DXY anyway. Look at this, just very happy with these technicals. This should be serious resistance, and so far it is. So far it is, and you know, now we're talking about 3 trend lines. Yeah, I know this looks messy, but it's correct. You've got this horizontal, that's a normal trend line, okay, and also this is, we flushed all the way below 100 from here. So to do this crazy rally, which is impressive, which is bullish, which suggests even if we retrace, that it's going to come back up, because this is not your small return to the scene of the crime, sort of, you know, bounce back to support and go back down again. This is bounce, hit resistance, it's supposed to go back down, but it doesn't, it goes up. Okay, now go back down, no up again. So we're not just going to go all the way back down. If we do go back down, we'll go back up. But this is where 3 trend lines coalesce. You've got the horizontal, which is normal. Then you've got these 2 long terms also coming in. So for me, you're not really allowed to just staircase up like you've done here. You're probably going to have to come back down again, and maybe even a bit more. But if and when, I'm going to say when it does come back down, I do expect another attempt, just because of how strong this move has been. So, but you know, so far it still hasn't flushed. So next week I think it's going to be hard for me to see the DXY just have a breakout just so easily. But I also don't think we'll have a couple of sideways days where it doesn't go up or down. So I think if there's 1 or 2 sideways days like Monday, Tuesday, if the market bounces, well, we'll see. If the market flushes, so far the dollar's gone up, but let's see. I think next week we have a bit of a decision, and my bias is to the downside. I'll try and clean this up over the weekend, but you know, they're here for a reason. It makes sense. This one at least I could delete, I reckon, even if we could retest it. I won't bother with the currencies, keep it simple today, because Friday of today really wasn't as impressive as the other days. Let's look at commodities straight away. Copper up. Okay, the markets were slightly up. and the dollar was unchanged. So copper's basically unchanged too. So nothing to speak of. I still think it's going to depend on the dollar. And the markets for me are going to go down. The dollar, not so sure, but it should medium term go down. So maybe copper rises. It's really a battle between the market forces and the dollar forces on copper. So, but anyway, unchanged today makes sense. Natural gas, I did expect a bit of a green day today. And, the rest of the commodities were green. But again, natural gas doesn't really care about the normal commodity dynamics because it doesn't really care about the dollar, doesn't really care about yields, it doesn't really care about the market. So it did its own thing. And what did it do? It again back tested this descending, which is nice to see. And it closed off its low somewhat. So I still think we have a chance to curl here. It really should. It should curl here, retest this massively important descending, and then break out and start to test 2.9 and then basically 3,305. So, but it's nice to see this retest here. That's why I didn't delete it yet. This one definitely has been relevant. So nice to see that in natural gas. I still think next week we have a curl because this retracement is a bit too much. Oil, a bounce. Yeah, markets are up, oil's up. And it's bounced off 79. It's supposed to. That's the first support zone. So bounce there. Probably going to retest 83, 84 now because 82 is not really as important anymore. It was resistance on the way up from here, 82, 83. But since we popped our head above 84, I think it's now 83, 84. But we should meet resistance here and we should probably then go sideways to wait for some other factor, maybe some supply demand oil news. I mean, you have these, what is it, ADP? I forgot, but you have, oil inventories. I forgot what day it is. Is it Tuesday? But you have geopolitical tensions. You have oil news pretty much every day. So something will act as a catalyst to either break out of 84, 85, or back below 79. If you start closing below 79, you should go to 74. So oil up slightly, bouncing off 79, totally makes sense technically. So that's nice to see. Uranium, strong, 2% move, nice bullish engulfing candle. It looks like it wants to go back up to test 23. For that, it probably needs the markets to go up, which might happen Monday, Tuesday, in my opinion. Dollar doesn't really matter, I think. I think oil is just naturally wants to go up. I've said this before. It wants to go all the way up to 30. Uranium wants to go all the way up to 30. It's just, it kind of can't do it if the market's crashing. And that might be what holds uranium down. But relative to other sectors, of course, if you're in uranium rather than Ford, you'll probably do very well if the market crashes, if you know what I mean. But a good day nonetheless, 2%. All right, gold and silver. It wasn't the craziest day, but still, you see this descending acting as resistance. Try to run towards 1900, stop there. Let's go to 15 minutes. I think this is where the resistance really shows. It's probably better actually to use this line going through here. Let me see if that's better. Yeah, that's really, really perfect. So there's your resistance. I do think we're going to break out of this unless the dollar smashes through this 104 zone, which I don't think is going to happen. But I think gold and especially silver will be pretty violent to the upside. It'll be a pretty strong bounce when the dollar retraces. But back to the daily. Looks good. Looks good for a bounce. Sorry about that. If we flush, those are the zones. 1860, I'm more confident of 1860 than I was 1885, but 1885 is held quite well. You can see why. These little resistance tails over here, and then this one support here. I said it was a light support zone, but so far it's held quite well. Yeah, obviously it depends on the dollar, the market's deals and all that usual stuff. But if we flush, I see 1860. Otherwise, so far it's this 1885 zone. But the resistance, definitely this descending line. That's definitely the resistance. If we start to breach higher, before I said I wasn't sure, I think 1940. And remember, 1940 was support over here roughly, right? Obviously, it can be 1935 one day, 1943 the other. But basically this zone, it was support here. It was resistance here. We broke out, back tested, and when we lost this, we kept on going down. Here it wasn't as obvious, but whatever, it's plus minus $5 probably. So if we break out of this resistance, I think I don't know if we'll run straight away to 1940, but if we do start to move quite a lot, 1940, then 1980. So we've got like $40 ranges here. So I think I'll add that little trend line. Silver, stronger than gold again, not by too much. You can see this immediate resistance at 23. Again, silver, every dollar, it's usually resistance. I mean, look, 24 is the next resistance. It's not the most obvious resistance, but it's a big round number, and it was actually support over here. So, and it's general resistance here. So keep it simple, 23, 24, and also the 50-cent range. I mean, here it might not be a clean move up. I mean, that'd be a huge candle, but maybe every 50-cent range too. Yeah, but otherwise, I mean, look, gold flushed 1900 and went below its June low, right? Below this June low. Silver has not done that. It's very strong buying. And what did I say? I said this area should be very strong because just underneath, if we even crack 22, should be this long-term ascending. And it looks like people were just not ready to wait and be that greedy to see if we flush 22. There was just aggressive buying before. So silver, this is a higher low than the last June low. So it's outperforming gold. And you know what? These, especially yesterday's candle, that Thursday candle, okay, the close wasn't great, but that was pretty strong, 2.5%. Today it's up. Gold isn't. Nothing really crazy, but it needs to close above 23, and then we can probably rally to 23.5, 24. Let's see. It depends what's going on in the other asset classes, but not a crazy day, so I'm not going to go into it too much. Levels on the way down, obviously 22 and then immediate below. But if it was to start crumbling immediately, it's the same thing. 22 will start being the ascending support. So I'm just going to say 22 for this entire range for both trend lines. And after that, 21.5, it could just bounce there and violently come back up and be like a fake out. That could really happen. But if you start to lose 21.5, then you're really talking, 20. Nice big round number. And then the chart's a little destroyed, but I've seen silver do that before. We don't have to talk about $20 silver right now. Right now, it's a little bit bullish. Okay, the miners, I thought they'd be up today. I did add yesterday. Okay, we're down 0.5%. GDXJ is down less, which is decent too. It's the same as zero. Down 0.5% is nothing. And actually, where it closes, pretty close to where I was buying. And I wasn't buying GDX, I was buying individual miners. But they did go lower than when I bought. But that's besides the point. I think we will have a reversal next week, early Monday, Tuesday. It could coincide with a market reversal Monday, Tuesday. If the dollar starts to roll over, I think you're going to see some decent power in the metals because they're waiting to pump. You can see the gold is being suppressed by this descending. And silvers are ready to go. Look at these green days when gold is basically red. And I think the miners will have a decent move, probably back up to here. So 29 resistance on the GDX. I can get rid of this, by the way. This was not a correct resistance just for one day. So I think if we do move back up, and this actually is also irrelevant. Yeah, keep it clean. I'll clean it after the video. But if we do move back up 20, just below 29 for me, GDX, if we go low, 26.5, very obvious, the last low from back here. So 26.5 on the way up 29 for GDX, GDXJ. Look at that hammer, very reversal indication. 32.3 on the way down. And if we go up, well, I would say 34, but I think it would actually go a bit higher, maybe 35 even. So let me just extend this for me. Yeah, but that's a decent reversal. I think we're going to pop up and maybe an extra day, 34, 35, and then we'll see what happens. But GDXJ looks good. It looks very good for reversal. And yeah, but otherwise they pretty much match the same relative price. All right, let's look at Bitcoin. This was the only thing that was really tremendous and decided to flush just after I posted my last video. So yeah. The horizontal ascending coincide pretty much. I did shifty this ascending a little bit so that it matched the horizontal. I did actually have it like this before, just a bit more, but I think now it makes more sense to keep it here because if it retests, it would be better to have it accurate because it seems like they both converged and it flushed. So what happened? We lost these two support zones and flushed all the way back down to 25,000, which is the only obvious support zone after losing this. I think during the weekend, we're not really allowed to keep going down without the market. So it'll probably hold this 25,000. Who knows? We could start to test it again. But I think come Sunday night, Monday morning, Bitcoin will be around, it won't be below 25,000. Maybe it'll go back up to 28, but 28 or 28,500 at least, at most, will act as resistance. Price support becomes resistance and then back down. But if you zoom out, it's not looking great. You've lost the ascending. This is what the markets haven't lost yet. If you look at the S&P and the Nasdaq charts that I've shown you, they haven't lost their ascending yet. So Bitcoin is underperforming. It was outperforming for a while. The markets were losing a bit and Bitcoin was outperforming. It was up on this banking day. The banks get downgraded. That was a bit of a pump, but it's just too little too late. And flush we go. And now if we start to lose 25,000, which I think can only happen next week, imagine the markets come down, right? Monday, Tuesday, small bounce. What about later? Wednesday, Thursday, Friday. If the markets start to flush, then Nasdaq especially starts to flush. Bitcoin might not hold 25,000. People might say, yeah, I think this bullish attempt to reclaim 30,000 and go up to 40, 50, 60 is over. Weak hands flush. Then we start to go. And this ascending, I'm not sure how much I trust it because, it only touches at the beginning. There's nothing. It's a vacuum here. So I don't trust it this much. In fact, I might even delete it. So look at that now. You start to lose 25,000. There's only 20,000. Big round number. And then the chart looks, okay, it's going to have to bounce, but the chart doesn't look good. And there's that 15,000 left, and then it's new lows. So for me, you got 25,000, 20,000, and, whatever you want to call this zone, 17 to 15, 15,500. There'll be bounces on the way up, but, it's quite weak, underperforming the markets. I think the market's going to go visit their bear market lows. And if it does that, Bitcoin's going below 10,000. Ethereum has already lost its 25,000, right? This for me is the equivalent of 25,000. It flushed below it. Right now it's trading above it. And again, it's the weekend. We might hold above. So 1,000, let's say 1,650, probably hold. We're just about holding right now. But if it starts to go down again, and I can see this happening towards Sunday night, Monday, sorry guys, you're gonna have to go back down to this zone here. And what is this zone over here? Look at this resistance here. It's probably, let's call it 1,350, give or take. This zone here, I need to redo my Ethereum charts completely. But this I could extend. This makes more sense. So let's say 1,350 / 1,400, this zone here is pretty much the same as Bitcoin 20,000. It's down here. So Ethereum is underperforming Bitcoin. To be honest, everything's underperformed Bitcoin. That's why Bitcoin dominance has been so high, although it's giving up a bit. You can see the altcoins going up today, not just relative to Bitcoin, but they're actually up green against the dollar. That's a little interesting, but I don't think that will save them because once Bitcoin, and I do think it will happen soon, once Bitcoin loses 25,000, closes below it, and we go to 20,000, this is all going to be red. So I think another huge major flush is coming in Bitcoin. And that is a precursor of what to expect for the general market. So I think market's down. Next week, Monday, Tuesday, maybe up. Otherwise, back to regularly scheduled programming, recent programming, which is markets lower, yields higher, dollar not sure, I hope lower, and it probably will go lower, and then commodities have a small bounce. Let's see, have a good weekend. I will, of course, do a weekly portfolio wrap also probably tomorrow. Enjoy your weekend.